Welcome to The Explainer. Right now, Pakistan is facing what you could only call a perfect storm. We're talking about a situation where a single social media post could cripple its economy, while at the very same time, a green massacre is unfolding in its own capital. The country is being squeezed from every possible angle. So today, we're going to connect the dots and show you how these seemingly separate crises are all tangled up in the same story. So think about this for a second. A post from Donald Trump, an exodus of multinational companies, and thousands of trees being chopped down in Islamabad. I mean, what on earth could possibly connect these three things? Well, it turns out they're all symptoms of a much deeper problem, a crisis that's hitting Pakistan on three very distinct fronts. So here's how we're going to break it all down. First up, we'll look at Trump's economic ultimatum. Then we'll dive into the great investor exodus. And finally, we'll cover what's being called Islamabad's Green Massacre. All right, let's jump right in with that global pressure. It all kicked off with one social media post that has put Pakistan in an absolutely impossible position, caught between Washington and Tehran. And there it is, the ultimatum in black and white. Any country that trades with Iran will face a 25% additional tariff on their trade with the United States. This is a classic case of economic hardball. It's basically weaponizing trade to force Pakistan to pick a side in the standoff between the US and Iran. So what exactly is on the line for Pakistan if it caves to the pressure? Well, for starters, $2.5 billion in trade. But it's much more than just goods. We're talking about crucial, cheap electricity that literally keeps the lights on in Baluchistan, one of the country's biggest provinces. You cut that off, and you're staring down a massive power crisis. But here's the other side of the blade. If Pakistan decides to ignore the warning and stick with Iran, it risks losing its biggest customer, the United States. And we are not talking about small change here. That's $5 billion in textile exports alone, an industry that is the absolute lifeblood of the Pakistani economy. And this is the hammer that would fall, a 25% tariff. A hit that big would be a death blow to Pakistan's textile industry, making its products instantly uncompetitive, basically pricing them out of the US market overnight. So you can see the dilemma, right? It is a total no-win situation. Stop trading with Iran and you trigger a power crisis at home. Keep trading with Iran and you face an economic crisis from abroad. It is the very definition of being stuck between a rock and a hard place. And let's just call this what it is. This strategy has a name. It's economic coercion. This isn't really about trade policy. It's about power. It's about using your economic muscle to force another country to bend to your will. Okay, so the pressure isn't just coming from the outside. Pakistan is also dealing with a major crisis at home, one that's got some of the world's biggest companies heading for the door. Now, the government is finally admitting there's a problem. The finance minister has come out and said that yes, high energy costs and heavy taxes are driving companies away. But then he kind of pivots and points the finger at the companies themselves, saying they have old business models. But if you look at the actual numbers, a different story starts to emerge. A corporate tax rate of 64% in Pakistan. Just look at the competition, 25% in India, 20% in Vietnam. I mean, it's not even in the same ballpark. It's more than double. You can see why a business might think twice. And it's not just the taxes. The cost of electricity is through the roof. A factory in Pakistan is paying 14 to 18 cents per unit. In Vietnam, 7 cents. Again, more than twice as much. So when your taxes and your power bills are double your competitors, it becomes incredibly hard to stay afloat. The government's defense is pretty simple. If old people are leaving, the new investors are also coming in. So it's just a simple case of out with the old, in with the new, right? But is that really what's going on here? Well, not exactly. It turns out a lot of this quote-unquote new investment is actually just an asset transfer. See, real new investment is when a company comes in, builds new factories, and creates new jobs. But what we're seeing here are companies just buying up existing assets. Aramco buys shares in an existing oil company. Wafi Energy buys Shell's gas stations. Nothing new is being built. It's just a change of ownership. As one analyst perfectly put it, the shop is the same, only the person at the counter has changed. So the cracks in Pakistan's foundation aren't just economic, they're also environmental. And there's no clearer example of this than in the nation's capital, where a development project has sparked what many are calling a green massacre. The numbers are just staggering. 2,911 trees. That's the official number of trees that have been ripped out of the ground in Islamabad, a city that was famous for its green spaces. No wonder people are calling it a massacre. So how did this happen? Well, it was a classic case of act now, think later. The process was basically 1. Cut down thousands of trees for a quick construction fix. 2. Ignore what environmental experts and the public have to say. And 3. Just promise to plant 60,000 more trees later, sometime. It's a top-down approach that has a lot of people shaking their heads. But here's an interesting question this whole thing raises. Is this just an Islamabad-centric outrage? I mean, let's be real. Deforestation is happening all over Pakistan. So why is everyone so fired up about this particular case? The answer, it seems, comes down to one thing. Location, location, location. The same level of protest is rarely ever seen when illegal tree mafias clear thousands of acres in other cities. But this time, the trees came down in the backyard of the country's elite, its policymakers, and its media. And that, apparently, makes all the difference. Okay, so we've looked at the global, the national, and the local fronts. Now let's connect the dots and see what this all really adds up to. The bottom line is this. These are not 3 separate crises. They're all symptoms of these same underlying problems. You've got this vulnerability to external shocks, these deep structural flaws in the economy, and this pattern of short-sighted policymaking. It's a vicious cycle where the country is just lurching from one crisis to the next instead of making real long-term reforms. And at the end of the day, you have to ask, who pays the price for all this? There's a quote that says, on this economic chessboard, the small pawns are the first to fall. And that's exactly it. From the small business owner to the family living near a cleared forest, it's the average people of Pakistan who are feeling the full force of this perfect storm. And that brings us to the ultimate question we have to ask ourselves. If a nation's foundation already has deep cracks, can it really withstand a storm of this magnitude blowing in from the outside? Or is it just a matter of time before something gives?